Can you trust this 11% rally on Wall Street overnight? Can you keep on buying companies? Which companies should you buy? And a word of warning from Paul Rickard. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. And before we start, yes, we are 1.5 metres apart. Social distancing practice at Switzer. Paul, can you trust this 11% rally overnight?
Well, first of all, Peter, congratulations on the intro. You did that well. You did your counting five pretty well. Okay, now got that off my chest, everybody. Nasty. Okay. But then look, classic rebound rally on Wall Street last night of 11%. More on the Dow. That's been hit harder. Interesting, some of the companies that have done better on the American exchange, like Amazon, didn't rebound as much. I guess our market's going to open up higher, but I think this is probably not going to go on with the day. So I'd be a little cautious about thinking our market's going to go up 11%. I think if anything, it's probably more likely to open higher and drift off a little bit, because this is a bit like this is a bear market style rally. Yeah. But look, we're to get all these over the time. I mean, interesting enough, there are a lot of conditions, I think, for the market to recover. We haven't seen the main one, which is a slowing in the curve.
That's the important one. The virus. His curve means the virus data has to start easing off.
What we have seen, though, is we've now seen that central banks are flowing the kitchen sink.
Central banks, great.
Governments, we now everyone
Stimulus,
expects.
And the Yanks are coming with $2 trillion.
The Yanks are expected to come to the party. Haven't actually, not a signed deal, but the American market's now going to price that in. So central banks doing everything. Government's doing everything. Now we actually need to start to see the curve start to flatten a little bit.
Paul's left one thing out. Also, the fourth leg of that stool we're talking about, where the recovery of the economy and stock market will rest. You've got central bank stimulus. I think the banks as a group right around the world are in much better condition than the GFC. They actually can help, and that's why our banks are deferring home loan repayments. All that stuff will help the economy go forward, but we've got to get the virus data down. And someone like Chris Joy, who watches it on a daily basis with his research team, he's a bond manager, he's suspecting in 3 weeks or so that curve might come off the boil, and that's when I think I would believe a really strong rally of the stock market.
Yeah, and that's why I think the market sort of wants to see that, because it's not sure whether it's sort of the V shape or more the U shape, right?
Or even the L.
Or the L, right? And that's why to see the impact of the of the containment policies, are they really working? People want to see that also to make sure that there's not, there's been some great data coming out of China, but there's a bit of nerves about saying, well, there might be a second or third wave. Can you really trust it? So we need to see that, and we need to see, there's question marks around whether Australia's doing enough, whether the US is really taking it seriously enough, et cetera, et cetera.
I guess the important thing is we may well have seen the bottom, but I wouldn't be surprised if there's still more sell-offs, because I think the virus data is going to get worse before it gets better. Anyway, that's our guess. Let's go to the companies that people should be thinking about, Paul. Which ones do you like?
Well, I think it's still you stick with the strong companies, right, Peter? One thing I was going to say is we now into that cycle now where companies are going to start raising capital. This is some of the weaker companies. Yeah. Seen this morning, Cochlear announced, and Cochlear is quite strong, but lost a big lawsuit in the US a couple of days ago. It's raising about $800 million. That's one of the reasons the market's not going to rally so strongly, because the market's already worked out as it happened in the GFC, right? Post the GFC, almost every company had to come out with a capital raising. There will be a lot of companies here that will require capital.
Yeah, because they're losing revenue for
a quarter.
So
So all they can do is raise capital to stay in business. They're not getting to get the support from the government. The government's helping small business, not the major corporates. So listed companies are going to have to do that, not across the board, but there will be many. And that's why the market's already worked this out. The insiders aren't going to buy the stock. They know there's a capital raising. It's going to be a massively discounted price, all right? So we'll see that with Cochlear today. We know Webjet's going to try to do one right through the travel industry. There are a number of companies that will go into this in the next couple of weeks to months. So be careful there. Stocks to buy, still stick with the strong. It's a strong company, strong balance sheets. That are going to be the best. They're going to recover the hardest. You keep seeing this every day. It's the strong companies that do best, and the weaker companies are going to get left behind. This is a classic, in bear markets in particular, people are far more selective about what they buy.
So in a sense, what you're saying is the companies that are more likely to rebound the fastest will be the top quality companies, And if you're prepared to take a much longer view, you will pick up weaker companies, smaller companies, at really bargain basement prices. But you might have to wait a year or so to see some real strong rebounds.
I think you might have to, and I think the way you might play that is wait for the capital raisings, right? These are
Yes.
going to be at big discounts to the current price. So there's going to be lots of opportunity to put money back into the market. There's also some bargains in some of the beaten up hybrid stocks because they've got, there's all sorts of nonsense going around about the banks. I think banks are going to be okay, Peter. The Reserve Bank is throwing a truckload of money at them. They're they're going to have some challenges around income, but there are some bargains in parts of the fixed income market, perhaps more so than the equity market, that you might like to look at.
And the government will stand behind the banks because the banks are a part of the rescue package. If they undermine those banks, by the way, Chris Joy from Coolabah Capital, he was saying that Australia's top 4 banks are some of the strongest banks on the planet. So therefore, people worrying about our banks, that's an unnecessary worry. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.